It's Linton here from Greenbox Markets. So today we're just going to run through some money management principles quickly. I've had a lot of questions from various people asking, how do I know exactly what lot size to trade? And this video will help you to understand the mechanics behind deciding what lot size you should trade on your account. Now, for the purpose of this video, I've just opened a $10,000 demo trading account so that we can just run through it and the numbers round nice and easy so that we can do the maths behind it comfortably and you can figure it out easily. So I'm looking at the pound USD chart and obviously not divulging my strategy to you right now, but I'm going to, for example, as an example, enter a trade on this currency pair, and we are going to then decide what lot size we should be trading on this currency pair. Now, obviously, it's been in a downtrend for a while now. I'm looking at this as being a bit of a retracement. So here's an impulse, here's a retracement, and I'm looking for the next impulse to the upside. So I'm actually looking to trade this to the upside, and I'm just going to put a line on there so that we can see where the resistance area is more or less of this retracement. So I'm looking at getting long round about here, and I'm looking at taking profit just before the top of this retracement, or the start of this retracement over here. So let's drop down to the 1 hour time frame and have a look there quickly, and we can see if I were to enter this position over here, where would I want to put my stop loss? Now, if I believe that this is going to be a turning point, a good place to have a stop loss would be, you know, sort of just below this turn over here. In other words, if I get it wrong and this isn't the turning point, then it's going to break through and it may go further down, but it'll trigger my stop loss. So I'm going to have a look here from where current market price is to round about where I would like to close this trade if it does go against me. I usually use a minimum of a 50 pip stop loss, and there we can see 50 pips is well below there. So let's work on the 50 pip stop loss at this point in time, with well over that on the table as a target. If we want to look at the 4 hour chart again, let's just have a look at that entry there. 50 pip stop loss is what we're looking at, and a take profit of around about 230 pips. That's given that I get this turning point correct here based on just an impulse correction and impulse. I haven't really analyzed this as yet, so please don't take this as a serious trade. This is an example to show you how money management works. So from a risk to reward perspective, risking 50 pips to make over 200, I'm very happy with that. That's a risk to reward of over 1 to 4. So yes, this trade is a go from my side as an example trade for you to see how the money management works. So now that I know my stop loss is going to be 50 pips from the current market value, how do I know what lot size I should trade? How do I know what type of risk I'm going to trade? And that all depends on the percentage of your account that you risk. Now, I like to use the MyFX book position size calculator when I'm on my desktop computer. When I'm on my mobile, obviously I use the position size calculator in the Greenbox Markets app. For this trade, we're looking at, let me show you here, I opened a $10,000 trading account quickly, a demo account just for the purpose of this video. So my account balance is $10,000, right? So here's the first thing I put in is my account balance, $10,000. Now, how much of my account do I want to risk on this trade? Now, I'd usually risk 2% of my account on a trade, so I don't risk more than that. So there I'm going to put in 2%. I know guys who risk more than 2%, but I generally don't recommend that to any of my clients. I would say anything from sort of 1% to 2% is a safe place to be. More than that, and you could get yourself into trouble. Stop loss in pips, we know that we're risking 50 pips. So you know, according to what your stop loss level is, exactly how many pips you are risking. And the currency pair that we are going to trade is the pound USD. And if we click the calculate button, there we can see that it tells us 0.4 lots. So what that means is, of my $10,000 on my balance, 2% risk of my $10,000 is $200, which means that 50 pips equals $200. So my stop loss is 50 pips, and I'm risking $200, which is 2% of my account on this trade. So if I was to enter this trade, I would enter it with a 0.4 lot size, buy, like so, and there I'm in the market. Now I can set my stop loss at 50 pips, 50 pips from my entry point. Let's get it as close as possible. And I can set my take profit at the level that I wanted to take it. And there we have a trade that has been placed with correct money management principles. I'm risking exactly 2% of my account. You can see it, $199.2, so $200 of my account I'm risking. And I am looking to make $951 on this trade. So if this isn't the turning point, which it very well may not be because I haven't actually analyzed this pair as yet, today, this is just for the purpose of this video. So if this goes against me and it does break this low over here, which means that it could be setting up for new lows to the downside, I'll get taken out on this stop loss and I'll wait for confirmation of a reversal and I'll take the trade again with the same kind of take profit in mind. If, however, I've chosen the correct turning point for this correction and price moves from this point up, when it breaks this level over here, I'll probably put my stop loss at break even or in a little bit of profit, and I'll then wait and see how the trade unfolds, and hopefully it'll get to my take profit level before it turns around and hits my profit stop. Guys, that's money management in a nutshell. It should give you clear understanding in terms of what you should be doing. So the first thing you need to do is obviously know what your account balance is. The second thing you need to do is know what percentage of your account you are happy to risk. And the third thing you need to know is where is your stop loss going to be. Once you know where your stop loss is going to be on the chart, you can see how many pips that is, and then you can go to this calculator over here and it will tell you exactly what lot size you need to trade in order to make sure that the money management on your account is correct. I hope this video has helped you, and I hope you understand how important it is to have accurate money management on your trading account. Don't simply just thumb suck lot sizes out of the air because you're greedy. Rather trade the correct lot size for your account so that you can stand a much better chance of winning at the end of the day, and also of saving your account from being under unnecessary pressure and quite possibly wiping it out completely because you are risking way too much in your trades. Take care, guys, and have a great weekend. Cheers.